Good morning, I'm Carol Harmer on behalf of the International Trading Institute. We looked at a chart last week, we looked at a couple of charts last week, but I want to stay with Bitcoin because it actually is looking quite good. With markets, when they're overbought, there are two ways that they can ease those overbought scenarios. They can either go sideways or retrace down to significant levels. Let's just quickly pop over to the Bitcoin market and we can see what it's done. If you look, let me scroll it out a bit for you. But if you look at what Bitcoin's done, okay, apart from making this high here, you can see that basically we've just gone sideways, okay? And going sideways, as you can see, has eased all the indicators. So although the market hasn't moved to a great extent, it is looking like it is a continuation pattern, and as the trend is up, we would be looking at the market now to go higher. I'm going to have a look at some other cryptocurrencies, not quickly with you, but I'm going to have a look at some other cryptocurrencies to see whether or not these are reacting in the same way. So we'll go back to the Bitcoin one, and if I pull this down, if you look, I've already put on your Fibonacci extensions. Now, Fibonacci extensions are when the market is in no man's land, all-time highs, they've been broken, the market has nothing to go for. There are two things that they can go for. Three, if you're really good and you know what you're doing. You can draw a trend channel, so you'll just be putting on two lines, you know, parallel lines, and it should then oscillate between those, you know, those parallel lines. Or you use Fibonacci extensions, and they're exactly the same as retracements, but the other way around, okay? And levels just don't come out of the air. They're not plucked like an apple from a tree. Traders need something to go for, and they don't go for something unless they know it's going to get there. You know, you've got to be this what I'm talking about, and I will go into more depth in another video, but this isn't for the high frequency trader. You know, if you're a trader who is on and off that screen all day long, then this really isn't the video, neither my knowledge for you, because it's just noise. As far as it's just noise. And if you make any money out of that, great. If you don't, you'll know why, and I will teach you how to. So we go back to this Fibonacci extension. Now you can also use pivot points, and they are so easy to put on. All you do, you take that previous high, low, close. So you've got that high. So we open at, so I'm going to show you the pivot point calculator that I use. I used to do it all by hand. I have to tell you, life is too short. So this pivot point calculator, let's have a look. So you've got the open, and we opened at 11905. The high was 12080. Low 11821. Close 11845. Now, because of the way the markets are closed, what we always do, we take the 12 o'clock close. It's 11995. 95. calculate that out. Now, your pivot point today, okay, you can see it there. There's your pivot point, which is 11948. We are interested in the support, obviously, so keep your eye on it. But the real levels we're going to go for are these up here, okay? Resistance 1, resistance 2, resistance 3, resistance 4. Now, as you can see, the market is just trading below the pivot at 11850. Now, you could also tie that in with this moving average here. Okay, so you can see the moving average coming up. You've got 2 crossing there, coming in at 11827 and 11623. Okay, so that's what you'd be looking at there. Obviously, if we start to dip below that 11624, you have a problem, because the chances are it would come down to this trend line break here. However, this isn't showing that at the moment. You can see the indecision in the market by the bars that are happening. Up days, down days, up days that have closed low, up days that have closed high, days that have opened and closed at the same place. So what you have to do is you have to sort of be really careful about what you're looking for. But if you use the pivot point as like a swing level, the idea of the pivot point is if the market is below the pivot point, it should go lower. If it's above the pivot point, it should trade higher. Now, we know that in Europe, we don't really have an awful lot of movement in Bitcoin. But you need to wait until obviously the US comes in. But keep them levels in mind. You know, don't ignore them. You'll have this video on your screen. Refer to it. Just refer to it, and also refer to the pivot point analysis that I placed here for you. You know, they work. Look at them. You can see. All right? That would be, if it breaks above there, up we go. Now, I don't think there's any more I can say on Bitcoin, but what I will do, I'll have a look through the other cryptos that we look at, that are looked at, and I'll see if there is a pattern that I can find that would give a direction to Bitcoin today, what it's going to do. I hope this has been helpful for you. I'm Carol Harmer from the International Trading Institute, and I wish you a happy trading day, and I will speak to you in a little while.